thank you so much for joining me in our webinar, specifically focusing on small businesses. We really believe that the American Rescue Plan has some big benefits for health insurance as it relates to employers and their teams. So I'm excited to share that with you today. I'm John. I'm your host for today. I am licensed in life, accident, and health insurance. I have 2 master's degrees, which the only reason I share that is I am an unapologetic nerd. I love spreadsheets. I love reading laws. I am an expert in the Affordable Care Act, individual coverage, HRAs. I have read and studied every single page and sentence of these laws. And my goal is to make it very accessible to you, specifically as the leader of a small business. It's very complicated. I also specialize in change management. I've worked with some very large organizations to scale up their mission, scale up their method and their teams. I love change and harnessing it for the better. So that's who I am, thought leader, speaker. You're going to hear a lot of me speaking today, so please make sure and stay engaged. I'll go through this really quickly. This is not intended to be a sales presentation, but I do want you to know if you've just joined us, if you saw my LinkedIn ad, or if you found us on social or online, Remodel Health is health benefits tailored to your organization's needs. That's what we are all about, so that you are able to discover more options. We're going to learn some more about that today, so you can serve your employees better. We know that your team is some of the most valuable assets and resources that you have. So serving them well is imperative, especially after a pandemic. And ultimately to control cost and quality better than you ever have. We've seen tremendous opportunity in front of us. And so I want to share with you at the very top of all of this, I am going to get into the weeds. I'm going to give you nuts and bolts that might feel like heavy lifting and it's a bit complex, and it is. But you're not alone. I don't ever want you to feel alone. And that's really what I'm here for today. That's what Remodel Health is here for. And all of us that are joining together in this little community, having a webinar through this technology. Here's the deal. 96% of Americans don't understand most of the things we're going to talk about either. So as you're learning, first, good on you for learning. That's a great start. But just if you feel like you're just catching up, that's fine. You're not alone. Another thing that I want you to know, I don't know what you're stepping out of in the team and the day you might have had, the year you might have had, the quarter. We just finished up Q1. But about 9 million small businesses are afraid they won't survive COVID-19. We all know this. I'm not trying to make it too painful, but the reason why you're going to see me get excited about this is, Forbes highlights 14 areas that businesses may be bleeding. Feel free to, all my sources are at the bottom, and I can send you my deck at the end if you'd like. This is one of the areas that can change for your organization to maybe not be one of those 9 million. That's my goal. That's what gets me excited, because it's real people like you, real people like your team that are seeing a real difference. And that's what I'm excited about. Now, if you're curious on how did a stimulus change anything to do with health insurance, I just want to talk about the second stimulus very quickly to say this has already been happening. The third one just help you have even more opportunity. The second stimulus had this thing called the No Surprises Act in it. It was a bill at the end of 2019 that had a bipartisan agreement where, let me give you an example of the scope of what surprise billing, balance billing, and there's a lot of technical terms here. My goal is to give you an overview, not a technical insurance training. But about 1 out of every 3 people have gotten a bill they were not expecting from their health insurance, where they thought it through, they went to their provider, and then all of a sudden they get a bill. 1 out of every 3 people. This is a big problem And this is a practical example. This is based on a true story of a person I personally know. They called me up and we talked through some things they could work through. They called 911 because their kid can't breathe. Okay, that's a time to call 911. They have a copay health plan. They're probably overpaying for it, but it's really good. And, it's excellent. They go to an in-network hospital. They have in-network doctors. They were expecting about a $50 copay for the ambulance ride, $250 for the ER. They have a premium overpriced plan, but premium plan. Well, guess what? That ambulance was out of network. And so they had no choice that's what they had to do as an emergency. So instead of like a $300 total, they're looking at like $3,000. Now, the No Surprises Act doesn't clean up everything, but these are the sorts of stories that got the bipartisan agreement. And then the pandemic hit, and then it didn't ever get put on the floor in the way that they were planning on it. They bolted it onto the second stimulus, and it's going to be an absolutely incredible thing because the number one cause of personal bankruptcy in the United States are medical expenses, and largely because of surprise billing. So we're really excited that the No Surprise Act of 2021, again, came with the second stimulus. These are the 5 things. I'm not going to go into this right now. We've got tons of resources on our website, links to all of the official documentation and kind of breakdowns of them. Feel free to look into it, but it's really, really helpful. The reason why I point that out first is it kind of just like slipped under the radar. Not a lot of people talked about how huge of a benefit it will be just to you, but also your team. Get our resources and make sure and equip your people with that. So let's talk about why the third stimulus matters. Okay, this was the American Rescue Plan. It's the $1,400 check one that you probably, if you're scrolling through your news feed, you probably saw. Here are the basics. For those of you who just want the answers right away, I love that about small business leaders. Just give it to you straight. Bigger discounts on plans, and even more people qualify. I'm going to say it again. Bigger discounts on plans, and even more people qualify. Okay. On what kinds of plans? Okay. Here's why it matters that employers like you, these discounts can be leveraged for your teams to save on costs. There are details on how you get that because you probably were thinking, wait, aren't those just individual plans on the individual marketplace? How do you work with a group? There's an answer for that. We specialize in that, but I want you to know what this means is that group plans are going to be more expensive than individual plans. So let's move away from those numbers for a second to give an actual story, give some people in this perspective. Okay, family of 4. Before I go into these 2 examples, these are based on the national averages. You know how averages work. They're going to be different all throughout the United States. These are national averages. Okay. And I have little links in there later on for where I'm sourcing this info from. Family of 4 making $60,000 a year. Okay. Let's say there's only a single income because maybe, one of the parents has decided to stay home with a young kiddo. All right. They're going to see a 58% decrease on the cost of their premium. This is going to be against that kind of silver benchmark, the national average one that we're using. 58% decrease on the cost of their product. Now, what that actually turns out into is about $221 a month back into their pocket. If this is a new baby, new babies cost anywhere from $80 to $100 a month in diapers. So this is going to make their transition of this new kiddo and having someone at home. This is incredible. 58% decrease. Okay. When I've done a lot of the data analysis, when I see the big win, I primarily see it in an older couple. You might know this, you might not, but individual products have individual prices based on the individual people. The older you are, the more expensive your insurance product gets. So the biggest win, the demographic that we're seeing is just incredible, are going to be the older couples, the empty nesters. Maybe you can see my little quotation in there. Let's say you have an empty nester, $75,000 a year. Okay. Maybe one of them works full-time, the other part-time. $75,000 a year. They will save on average $16,668. Yes, these are real numbers. It's 42% decrease in the cost of their premium. So imagine what their premiums were costing this, because it's way more expensive. They were above this threshold limit that was part of the big gap in the ACA. That's what happened with these numbers. So again, I just want to look at these two stories first. Okay, we're going to get into the numbers, but look at these two stories again. I want people and faces as we're learning details. 58% decrease for the family, $16,000 of savings for the empty nesting couple in their 60s. Okay, I said it once, I'm going to say it again. This does mean that group plans are now more expensive than individual plans. Okay, group plans are more expensive than individual plans. And I said this again, employers can leverage these individual plans and unlock the discounts. Okay, I will get into how you can get this done, but I wanted to give you the basics, the faces behind the stories, and then just your answer, yes, you can. We'll get into it in a second. Now, for the thinkers and the engineers here, maybe the accountants or the people that are taking care of the bookkeeping, or just people that know that sounds too good to be true. Okay, I'm going to walk through the actual math with you in just a second here. Here are the 6 things that the American Rescue Plan hit in health insurance. We're not going to go through all 5 of these. We're just going to be hitting up those last 2 points. But subsidies, like what those are increasing. I'm calling them discounts because that's how they work. The 400% FPL, it was the subsidy cliff. That's going to be our biggest focus. But there's a couple other key details here. Again, we have a pretty full breakdown of all of our resources, remodelhealth.com/resources. You can go there and read up all you want. You can even Google a lot of this stuff. It's very accessible and available. So let's do this step by step. For those of you who are curious and would like to learn. All right. I'm going to get through this, I promise, but just hang in there with me as we get through some of these weird numbers. I just got off of a meeting with a colleague of mine here at Remodel Health, and he's one of our smartest guys and total engineer mind. And even he was still asking through, making sure he understood it correctly. So again, you're not alone. If this is confusing the first time, feel free to just click the rewind button and we'll get back. It's so funny. I said rewind like I'm using a tape recorder back from the 80s. All right, here we go. The federal poverty level is step number 1. Federal poverty level is a benchmark that the federal government has set that determines this level. It's the level that you qualify for different programs. Medicaid is one of them. Food stamps would be something else. Those sorts of environments of qualification. Well, they use FPL as the basics, one of the pieces to determine how big of a discount that people get. Okay. So what you're going to have is I'm seeing somebody has a chat. Is this being recorded? Yes. I'm so sorry. I should have checked that right away. But yes, thank you so much for double checking on that. Absolutely. We're going to make sure you get this. Okay. Back to federal poverty level. Okay. This is just the 100%. So a single person in the household, if they make $12,880, that is 100% federal poverty level. Okay. Then there's these different levels, 200, 300, and you're going to see them listed. That they get different discounts, and we'll break it down. But check this out, the example. Family of 4 that makes $79,500 is at 300% FPL. Okay, great. This is going to be really important here in a second to see the big difference of what just happened. Now, you see those percentages over there on the left? That's where the FPL starts, okay? And so here's the step-by-step for how the subsidy, the discount is determined. Step 1, FPL. We figured that out. Step 2 is what I'm calling the spend limit. Trying to simplify this for you. You're not going to Google spend limit. It's not going to show up, but that is essentially what's happening. The spend limit is that center column against the silver benchmark. So let's first look at that 300% that we were just talking about for that family. Or actually, I have a different example right here. It's a family of four. $60,000 of income, they will qualify at the 229% FPL. So you see where they're kind of at. Their specific spend limit, the cost limit, is 7.6% or $379 a month. Okay. That's how much they're supposed to spend maximum on the silver benchmark. Well, if the silver benchmark, and in this case, costs $499, but they're only supposed to spend $379, boom, you nailed it. Now we know how is that subsidy come into play. I will tell you right now, I want to make sure and just clarify. The subsidy gets spent on any of those individual plans. It's not just on the silver benchmark. It's not like they only get the silver benchmark, the discount on that. It's just that's how they've determined the subsidy. They're able to add that $120 to a gold plan if they want to upgrade themselves. If they want to downgrade it and go to a high deductible health plan, that might actually fully cover the cost. And so again, this is just to determine the subsidy. Hopefully that's clear as mud, right? Well, hey, let's keep moving forward here to see the big difference in the American Rescue Plan. Okay, so now we have that percentage that we were just looking at right there. Now look over here to the right. The 229, they were at, let me look back, 7.6%. They're now anywhere from 2 to 4%. So that means their cost limit, spend limit, the expected cost that they're going to pay is lower. Did the cost of that silver benchmark go down? No. So what has to happen for them to spend less? More of a subsidy. Okay. So if you actually average up these percentages, just throw out the over the 400% for now, because that's brand new. Let's just look at the old group of people. Their expected costs on average were 7.6% of income. Now it's down to 3.41. Are you following me? This means that their expected costs on that silver benchmark have been cut in half. It's unbelievable. So great for these people that are on these plans. It's absolutely incredible. So here's our family again. They were paying 7.6% of their annual income. Now they're not going to spend any more than 3.2. That's a 58% decrease. And you can kind of see the numbers here. And the site that I'm actually quoting here, they released all this before it was officially signed by the president. And so when you see House proposed, this is the official law. But you're going to see the difference per month. It's just incredible. Now let's look at that 60-year-old couple, the huge difference. And this just shows you how it was happening. Look at their FPL level. They were at 435%. Why? They were only making $15,000 more than the family of four. Like, how does that work? Because the FPL level is based on how many people are in the house and income. And so their ratio just went through the roof. They had no discounts at all. So the cost of that silver benchmark on average was $1,920. $1,920. So now they qualify for a spend limit, which then means there's going to be a subsidy. Well, the spend limit between the ratios is not going to be that dramatically different. Yeah, you're right. They're both going to spend a couple $100, but you know what's different about the older person? Yeah. Remember what I just said? Individual products have individual prices, higher prices based on those older people. So that's why the discount, it's just incredible. The subsidy now kicks in at $1,300, basically $1,400 a month to go toward this. I mean, it's just an incredible benefit to this family. And I don't think I have the particular slide. I was working on another deck and just wanted to make sure you know this. This 60-year-old couple, if they do, let's say they're behind on their retirement and it's been hard to catch up because health insurance costs are so much. and they take $15,000 a year and start aggressively investing it over the next 5 years. Okay. They're investing like they're in their 20s again, just going all in, trying to catch up. This could potentially get them caught up to about $100,000 if you look at the compound interest in aggressive investments from the time they're 60 up to the time they're 65. This can be a life-changing difference for an individual or for an employer. Okay. And so here's my pivot into chatting with you about this. Yes, I've shown the dramatic differences in cost of how this can make huge differences where maybe individual plans were on your radar. Maybe you thought about just canceling your group plan and sending your people out, especially if you're real small and you're not over 50. But imagine these discounts applied to every single individual in your organization and the aggregate difference. I want to give you the idea that smarter healthcare spending creates stability and savings for greater security for your team. I think we've been overspending or not spending because it's too complicated, it's too scary, it's too expensive. You do now have a better opportunity than ever to take care of your team, make sure that they are safe. So what does this mean for group health benefits? Well, I'm going to push the pain button just a little bit more, making sure you have all of the details that you can have. What were we doing in 2020? Other than going to the doctor? We were staying at home, canceling our planned procedures, or they were getting canceled on us. We were not getting out a lot, which means we might have been even just getting a little bit more unhealthy. But I mean, we're getting older regardless of anything else. Maybe we weren't active. We're getting a little older, but we definitely are putting off a lot of care. You combine all of those things together, particularly the non-emergent visits and procedures that were rescheduled for 2021. Now think of all the procedures that were supposed to happen in 2020 that now are landing in 2021, combined with all of the normal things that happened in 2021. Yeah, you're right. So I looked at, this has been on my radar for quite a while. They're projecting anywhere from a 4 to a 10% increase. 10% is kind of what they were originally thinking. The latest, and this is just from, I think 2 or 3 weeks ago is when I saw this released. They're projecting it could be upwards of 18%. So I think that our kind of median threshold is going to be about a 10% increase on your group health insurance. I would hope maybe you don't have it, but the reality is carriers are now having to pay out a lot more this year. They're going to have to reset costs and everything at the end of this year. So you need to start thinking not only about taking advantage of something, that's great, but also play a little bit of defense ahead of time so that you're not in October or November getting a renewal and then you feel under the gun and you have to make a bad choice. It takes too long to transition. Remember, I told you I'm a specialist in change leadership. What doesn't work well for your team for change is for it to be under a lot of pressure. So I really want you to rethink employee health benefits. I want you to realize what is coming, whether it's the worst or it's just uncomfortable, what is coming. So how can an employer take advantage of this? Well, the first thing is I want you to know that the IRS has already shared their opinion on this idea and this solution. So it's also not a new solution at all. It's been happening for 6+ years. Employers were realizing, post Obamacare when, especially back in 2011, when health insurance just went through the roof, the entire industry imploded and everyone saw those dramatic increases. One of my employers that I work for saw the cost actually doubled one of those years. During that implosion, employers were canceling their group plans. And what they asked the IRS is they said, can we just cancel a group plan, give our employees taxable wages, like it's a stipend or that's sort of an idea, but taxable. Tell them to go take advantage of subsidies, point them in the right direction, like resource them. Can we do that? And the IRS said, yes, you can do that. You're going to have to make sure that they understand they don't have to use it for health insurance. It's their money. They're paying taxes on it, but you can point them in the right direction. That's fine. There's, that's not illegal for you to do that. So that particular notice is IRS notice 2015-17. The link's right below, but we've got a bunch of documentation on our website. Feel free to Google it as well. So this has officially been happening since 2015. So we're going on 6 years of this being official, this sort of method. This is going to be my shameless plug here, kind of in this section. Remodel Health has a version of this called Wage Up because it's taxable wages. We organize it all. We have software to help you organize it, figure out how to make sure everyone gets the budgets that they need, that they have high quality benefits, spousal plan options. Also, like we can help combine families onto spouses plans. It's again, tailored to your organization and puts you in control of cost and quality. So our Wage Up harnesses the power of these new discounts. So we were ready to go and we just flipped the switch and everything. It was amazing rerunning quotes in our software. Millions of dollars are going back to our current customers. And then now all of those people are, I went back a slide and go forward. All of those people are now chatting with us and saying, hey, I've got a referral. I'm going to tell you about my friend. So also, if you're a large employer, an applicable large employer, ALE, more than 50 full-time equivalents. If you know, if you don't know, we don't have time to talk through that. Check out this screen right here. You can do Wage Up as an applicable large employer. You do not have to have a traditional group minimum value plan and offer that to your people. There's smarter, better ways to take care of your team. We have done this tons of times. This is very, very viable, and this is very, very helpful to your organization and your people, especially if you're needing to turn the corner. If you're still feeling the pain, you can do it. The way that you deal with it is you help actually just pay the shared responsibility. So the IRS will send you a bill. It's not a penalty. It's not called a penalty. It's not charged as a penalty. It's a bill, tax bill. And so we help you kind of figure out what that's going to be and plan for it. But I mean, it's smarter. And so speaking of smarter and turning savings into security, I'm going to give you just some free consultative advice on how to approach health plans, just in general. First, remember how I mentioned, like my friend, they might be overpaying on that copay, that gold copay plan. In general, HSA plans are around $10,000 cheaper than a group gold plan. Okay, if you take that $10,000 and you dump it into a health savings account, most people are only going to the doctor around 2 to 3 times a year. That's the national average. Why are you paying a gold plan when you probably will not be needing it? Now, what you do need is coverage. And so why not take cash, put it into a savings account for your team as a benefit? And then if they don't need it, they keep it. And they just keep, increasing that every single year. You can also bolt on a group HRA to this same sort of a chassis. HRA is a health reimbursement arrangement where you could even reimburse costs on the back end, like once they reach a certain threshold. So if you're giving them cash on the front end, reimbursements on the back end, minimize their actual exposure to costs. And then the other thing that I would recommend is if you have enough savings, get some extra ancillaries in there, like an accident plan, super helpful. I have one of those. I've got little kids, so it just makes me feel better. And so it looks like we got another chat right here. Business owners eligible for Wage Up or only employees eligible? Thank you so much for that question, Blaine. It is going to be different. As you probably know, I think you're referencing the S Corp and the 2% more than an S Corp. If that's what you're referencing, there are creative ways in aggregate to take care of the team as a whole, including the owner. Now, The owner will receive the wage up, as you've referenced it here, a little bit differently. I'd be happy to chat with you offline, and it has to do with the write-offs of what's actually taxable and what's not for more than 2% S Corp owner. But the answer would be yes, we can take care of the whole team through wage up. We already do that a lot. It's just there's a few more steps for if you're organized in that way. So hopefully that answers your question. I want to give you this big idea. So many times we are just paying rent to our healthcare. We're not investing into our healthcare coverage. And that investing is ultimately just the idea of savings accounts, or as an organization, health reimbursement accounts, and you're only reimbursing what's actually used, and you become an owner of the plan instead of just paying rent, just paying that rent out just in case, just to kind of live there. We want you to start investing so you can actually start gaining equity all around holistically and helping protect your team more. That's really, really the goal. Millions of dollars are ready to be regained back into the budget. And I mean, again, we immediately, it was fun chatting with some of our VPs, and we were all running calculations once we realized this was officially law and it got signed in. Just absolutely incredible to see the immediate impact that it helped on our teams. And employers have a choice of doing a couple different things. If they're saving this much money, they can save it into the organization. And I've read the data. As a small business, that's my guess is what you would want to do. You'd probably regain it, keep your employees even with what they're spending right now, and then you absorb all of that savings just to catch up. But if you just haven't been able to give cost of living raises, you can come up with a lot of difficult situations that you might be in. It might be time to split the savings between you and your team. And it is flexible to be able to tailor it out that way as well. So I want to make sure and give some more time for some questions. We're right at that 30-minute mark right now. I want to make sure and share with you the resources, readmodelhealth.com/stimulus. Feel free to go there. You can get our full stimulus guide, all of our resources right there. Here's my information. If you want to just contact me, maybe you're one of those people that you don't like to raise your hand in the middle of the group. You don't want to bust the flow. Feel free to you can text me, call me. I'll connect you with whether just myself or my team. We'd be happy to evaluate you. 2 takeaways that I want to make sure and give you here. First, if you have a group plan, all of the evidence that I'm seeing right now from the data, you are overpaying, on your traditional group plan. The second thing, if you are not yet doing anything for your people, they probably don't know how to take advantage of these discounts or which plans. And you can step into health benefits for the first time in the most accessible way you've ever had. So you're either overspending or not spending. Please make sure and just at least chat with us. We'd love to help you out. Our consultants are ready to just give you all the answers you need. See if you can find it in the budget for this year or plan out for the end of next year. The time is now, and we're really grateful to serve however we can. If we have any more questions, please feel free to keep put them in the Q&A. I'll kind of keep riffing here for a little bit, but I've seen a couple people log off. So if you need to leave, that's fine. I wanted to make sure you had at least the high level details. Here's a question that people ask regularly. No one has asked yet. Isn't this just for the next 2 years? Okay. Oh, and we see a question. How can we get a replay? I love that question, Thomas. Everyone that is registered, we have your emails and we will send you the link of this video directly. And then feel free to share this as well with any of your colleagues. We want to make sure just resource all of you, whether you use us or not. I will say the complexity of staying compliant is very difficult without a third party. And that's why, we specialize in this, but just take advantage of this. We want to make sure that you, as America's backbone small businesses, are not leaving money on the table. And so, yeah, Thomas, we'll get you a replay. I want to back up to what I was saying before Thomas's question. How long is this going to last? Isn't it just for the next 2 years? That would be a great question. If we look back at the precedents set by all the presidential administrations, we would fully assume to just by executive order at minimum to see this renewed an additional 2 years. So we're seeing this as a 4-year. That's the way that we, based on all of our historic trends, we would fully expect this to be for the next 4 years. At that point, y'all know that health insurance changes. We don't know what we're going to be looking at. We're going to be looking at possibly a different administration, presidential administration at that point. After 4 years, we could potentially see the same presidential administration or the same party, different control of the House or the Senate. There are lots of variables after the next 4 years. So here's what we just want to encourage you. Move now. Don't waste a second. Don't waste $1 that's sitting on the table waiting for you. We'll evaluate it. If it doesn't work out for you, you're going to see the numbers right there, your old plan and then potentially your new idea. We'd love to chat with you. Our team is very passionate about serving in this way. So feel free to reach out. Blaine, what are the key advantages of WageUp over offering an HRA? That's a great question. With an HRA, you don't get discounts. All of those discounts that I just highlighted, the new bigger discounts or more people qualifying, you cannot use individual coverage HRAs for those premiums. Oh, but what are the other HRAs on the back end? I'm glad you asked. Those HRAs are just medical expenses. Totally different type of HRA. I'm sorry that they're both called the same thing. They're both reimbursement arrangements. And so, but the individual coverage HRAs are for premiums. If you use an ICHRA or a QSERA, Qualified Small Employer HRA, those are, unless your group is real specific, and none of you like the discounts become irrelevant because you make so much money because obviously it's going to be threshold. Just in general, HRAs for premiums can't compete against WageUp right now, at least in this environment. So great question. Again, just clarifying, Blaine, HRAs do not qualify for those subsidies for the discounts. WageUp does. So there's your answer. Thanks for that. Any more questions before I cut you loose? I'm still seeing people on here, so I appreciate you spending some extra time with me. If you don't have any questions here in these next few seconds, I'm going to let y'all go. We will be emailing this to you. Thank you so much for joining us. Thanks for learning. Thanks for stepping up for your team, for small businesses all over the United States that will be able to take advantage of this. We're really grateful for you. So we want you to discover more options, to serve your employees better, and to finally control costs and quality more than you ever have. Again, my name's John with Remodel Health. We're here to help tailor your health benefits to your organization. We hope you all have a great day. Blessings, y'all.